there's so much out there. There's so many things to learn, so many things to do. It's mind-boggling. So I'm always behind. And I'm also insecure that I'm going to lose every client tomorrow.
So good Jewish. That's like you're doing well, but it could all be gone tomorrow.
That's right.
Scotty J. Y'all ready? Because there's no going back. You have a firm and feel all alone. Another tax season down, you still haven't grown. It's a struggle, but wait, you're not alone. Berkey built a platform that'll help you transform. There's a better way to CPA, new technology and processes. Manage teams and price profitably, deliver high quality. Scale your firm, building with limited time and money. Keep up with a consistently evolving industry. That's funny. Building and branding can be backbreaking. Growing from scratch to sale. Don't sell your soul for traditional. Come join a platform that's built to scale. Share strategies on a complex itch to tax tips and tricks. Dark horse so dope, there's not a problem that they can't fix.
You wanna collaborate. You want both autonomy and support. If you want community, then become a principal advisor. So if you're ready, say a better way, not CPA.
There's no going back.
May I have your attention, please? May I have your attention, please? I repeat, may I have your attention, please?
This is another public service announcement brought to you in part
by Accounting High.
The views and events expressed here are
of the next generation of accounting and tech professionals leading this space.
The events and suggestions are not to be taken lightly. Children should not partake in the listening
of this podcast.
Anything else?
Yeah.
So without further ado, introducing the star of our show,
Jason Ackerman and Scott Scarano.
And very special guest, Ed Mendlowitz. I think I said it right. I'm terrible with names, and you're Jewish too, so I should be able to say it.
I'd get the Jewish names.
Ed, it's an honor to have you here. You've been around a long time, a legend in the accounting space. So why don't
we got a lot of wisdom in the room?
A lot of wisdom, mostly with Ed, almost none with me, a little bit with Scott. Tell us.
I got a little wisdom.
So tell us how. Let's go back. How did you decide to get into accounting at the very beginning?
Well, let me just talk about wisdom. The articles you write in the CPA Journal are fantastic. I'm telling you. And the last one you wrote was about 2 months ago, was overall about practice management.
Actually,
you hit it right.
He just sent it to me.
No, that's the newest one. No, that's the latest one, which they're mailing out. I don't know why they sent it out that way. But anyway.
That's you write it for free, but they send you a free copy. I bet Ed's in this one.
He sent that to me. No, I'm not in that. They sent me one. I couldn't find my name in it. So, and I don't think you had an article in it.
Well, thank you, Ed. You just told us you've written 29 books.
Right.
Which is amazing. I have one of them
30
here.
30 books.
The 30th should be published, but your publisher or your editor screwed up. Look at that.
By the time this episode is released, the 30th book will come out.
And look, you see, Ed, I actually have things that I wrote. So, I at least made it to page 173.
No, it's okay.
I might have not made it all the way through, but I at least made it there.
Okay. Well, it's a book that you don't start from the beginning and end at the end. You look at it when you have a question to see if I covered it.
That's what I like about, and I've got some questions on the questions, but tell us how you got started in accounting at the very beginning.
My father was a CPA, and when I was a kid...
Perfect. You're a son of CPA too.
Yeah, and when I was a kid, all my friends played house or doctor. I played accountant, and I wanted to be an accountant from the earliest I could remember. I wanted to be a CPA like my father, although not like my father, so to speak. So I never worked for him. But I always wanted to be an accountant.
So what number was this in New York? Where your dad was?
I grew up in the Bronx, yeah. In Bronx, he was a sole practitioner. He had an office in the city. He would go to clients all day long, and then he would come home at night a little late. He would leave a little later than most people, and he would get home a little later, and he would have dinner. And then after dinner, he would call his clients that called him during the day because he was their client, so he couldn't call back. And I would overhear the conversations. I was a kid, and I picture me being 6 or 7. So I don't know what he's talking about, but it seemed like none of the people he spoke to could make a decision without hearing his advice. And my mother, who typed his tax returns and reports, knew everybody, so he would then explain to my mother what that person wanted. And it seemed to me that my father was a very powerful person because he had all these people who couldn't make decisions without getting his advice. And I wanted to be important and powerful like my father. So that was my first impression of accountants. Not, of course, he did tax returns. My mother, it would be typed all over the house for a month and a half. People would come on Sundays, who I got to know. Every year they would come on Sundays during tax season and get the tax return because he worked on Saturdays. Financial statements, I didn't know what a financial statement was until I got a little older. But my impression of accounting was what my father did with the advice that he did. And I got to tell you something. As I got older and I learned more, I realized he never got paid for that. And you know something? I don't get paid for that either. We have a new thing in public accounting called bundled services, subscription services. I've been doing that since I started. I would get a client, I'm talking about a business client, and I would say, okay, you need a tax return, you need this, you need me to come every month. I would add it up, and I'd say, tell you what, it's going to cost, I'm talking about a long time ago, let's say today, let's say it costs $10,000 a year. Pay me $833 a month, and it covers everything. And that was a subscription service.
So you were doing fixed price billing before it was super cool.
I was doing it. I was really doing it right from the beginning. Fixed price, subscription. I got paid every month. You know, when you get paid every month, you know, when you're on a time bill basis, you bill the 10th of the next month if you do the service. And then if you're lucky, you get paid by the end of that month. When you send out a bill on March 1st, the check is there by March 8th and 9th. And the way I was, if I didn't get the check by the 8th and 9th, I called the client to find out if there was a problem. I'd say, no. I said, well, you didn't pay me. We've just sent you I said, yeah, but that's my salary. You got to pay it right away. And when I merged with Withum, we had no accounts receivable. We had a few, you know.
So do you remember what your dad's CPA number was?
It's low. No, I don't remember, but it was, my number's pretty low. I think he was like number.
What's your number?
I think it's 24,000 and something in New York State.
Yeah, mine in New York is 108,000.
But you know, my father.
I bet your dad.
I got to check my grandfather. Yeah, my grandfather was in New York too.
I bet his was like really low.
No,
that'd be cool to find out. Well,
I have a certificate. It's about 8,000 and something. But you know, my father was CPA. A couple of his brothers were CPAs. I'm a CPA, and my daughter-in-law is a CPA. So we actually have 3 generations of Mendlowitzes that were CPAs in New York. But I'll tell you something that I learned from my father. You learn. My father didn't sit down and say, "I'm going to tell you this." My father was admitted to practice before the United States Tax Court, and he got a certificate one day. And I asked him, "What is this?" He says, "Well, you now have to take a test to become admitted, but they grandfathered in anybody that was a CPA that was practicing." So he applied and he got a certificate. He got admitted to tax court. When I found that out a couple of years after that, I found there's a test that CPAs could take, which I took the test and I passed it. They give the test once every 2 years in Washington, D.C. So I'm admitted to practice before tax court. And I actually have tried cases. I tried more cases in tax court than every lawyer in the tax department in my firm combined. But in any event, so I found that out from him. He has a certificate, which I still have his certificates. So you find things out. By the way, I have offered to help people write articles. I've helped 150 people write articles. I've helped over 75 people give their first speech. I have never helped anybody become admitted to practice before the tax court. Not one person has ever took me up on it. So that's one thing I
This is
tried
led by
to
the
help
number.
people with.
Maybe
What's
I
your
need
record?
to do that.
What's
Yeah.
your record in tax court? You've done it.
My
plenty of
record
times.
at
You have a
tax
winning
court
record.
is I tried 6 cases. One of the cases, I had a whole opinion. I lost every case, by the way. But I
So 0-6. That's why nobody took you up on it.
no. Now listen, one case involved Section 306 stock, and I came up with I couldn't get a 10% concession by the IRS. Wouldn't give in on 10%. So I went to court, and I gave an argument which the judge agreed with my argument and said that should be a new test for 306 stock. But he said it didn't apply to my client, and he explained why it didn't apply to my client, because he was a cheap son of a bitch and never gave charity. And I said a motive for doing 306 stock should be charity. So I lost that case, but in my mind I won because I got an opinion. But I did try one case. I can't say I lost it. The 6 cases I lost were with briefs. Were all losing cases. But I got experience. I helped my client. My clients got the day in court. But I must have filed 100 petitions. And of the 100 petitions, I've settled those cases. In fact, one case I just settled a couple months ago was a losing case. And I settled it where I won about 80. I got 80. The client had to pay about 20% of what the government wanted. And that's because of my knowledge of the tax court procedures. So it's a great strategy, and it works. But I got to tell you, one time, I was called by somebody 3 weeks before a trial date. She had to go to tax court. So I said, fine, I'll handle it. I call up the attorney. I said, ask the attorney for a continuance. He said, I'm not giving you a continuance. I said, I just got involved. He says, that client's been stalling for 2 years. I'm not giving you a continuance. So I met with her, and I met with her witness. And we go to trial, and we're at the trial, and the first person I called as a witness was the IRS agent who had nothing in his file that could substantiate the IRS's position. You can't have a better case than that, right? Then I put my client on the stand, and she's lying like crazy. She's lying. She told me everything, then she's lying. So the judge called a recess. He said, I want to have a recess. He had me and the government's attorney come into the chambers. He said, look, goes to the IRS attorney. You don't have a case because you're not prepared. And he points to me and says, your client's lying like crazy. You two guys better settle. I said, let's split the difference. He said, okay.
Oh, so you could have won that one.
I love it. I feel like tax court must be super fun.
You learn things. If you have a complicated issue on a tax audit, very complicated issue, and let's say it's a losing issue, you could get the briefs of the IRS and the opposing counsel from the tax court, and then it gives you all the arguments on both sides of the. Then you got to just look for the crack. So I would say I had at least 100 cases where I filed petitions, where I settled every case except the ones that went to trial. But it's a great credential.
You charge by the hour for those cases?
I charge by the hour when I know I can get a big fee. I just had a call now. I just had a guy just called me now. Spoke to him 40 minutes ago. The guy exercised stock about $1.5 million of stock options. $500,000 he exercised. He was referred by his accountant. No, he was referred by a friend of his who's a friend of mine. The guy exercised the first third and he had to give the company money for the tax. The other 2/3, he didn't have to give the company money. So now he owes a fortune in tax. He wanted a second opinion. So first he does his own return. I says, with this kind of stuff, are you doing your own return? You screwed yourself because you should have an 83B election, number one. And then I said, if you want me to handle it, my minimum fee is $5,000. It doesn't look like it'll be more than that, but my fee is going to be $5,000. So I don't think he's going to use me, and I really don't want to help him because he's the kind of guy that thinks he knows it all, and now it turns out
he knows more than you.
Yeah, he also is I'm the second guy that he spoke to. He's shopping around for answers. One time I had a client. Look, most of my fees are fixed fees. I get paid monthly. Some of them I adjust at the end of the year. Some of them I do change orders. A construction guy that do change orders like crazy because they understand the language. But I had one client that I got around 1979, 1980. The fee was $15,000 a year, $1,250 a month. I said, I'm going to charge you a retainer $1,250 a month. The first couple of months, something came up, and including me having to go to California to make a presentation to his key people. My time came out to $97,000. When I was all finished, I get back, I call the guy, I say, I want to meet you. He says, why? I says, I have to charge you for what I did, and the fee's pretty high, and I want to explain it to you. He says, how much is it? I say, $97,000. He says, I don't have time to discuss it. Give the bill to Dan, who was the controller. I got paid 2 days later. So you got to use your judgment. Look, I'm in business. And I'm not in business, I love accounting. Believe me, I love it, but it's not a hobby. It's a business. And I got to make money from it. You know what kind of money I have to make? I have to make a living. I have to be able to fully fund my pension plan. I have to have money to grow my practice. And then I like to have some profits now and then. So if I'm making that, I'm doing okay. And I charge the fees accordingly. And there are some people who will pay you by the hour, and there's some people most people won't. And you got to use your judgment. Sometimes I'm right, sometimes I'm wrong. Sometimes you do stupid things, and you learn. I got a guy referred to me by the guy in a pizza restaurant many years ago. He had a friend that had a big tax, $100,000 estate in New Jersey. He explained it to me. It's something I could have fixed with a phone call. So the client calls me up, potential client. He tells me the issue. I'm telling you, I could have made a phone call and maybe a letter. He says, what do I charge? I said, I charge $500 an hour. That was the end of the conversation. If I would have told him I charge $1,500, I would have got it. So now there's not a single client I have today that knows my rate. No one, I have not quoted a single rate to any job I've done, at least in the last 5 years. So I am a proponent.
I have the hardest time pricing these days.
No, I'll tell you what I did.
Pricing.
You're
go ahead.
Well, you're amazing because you've basically been learning how to value price for 50 years. So you've gotten really good at it.
More than 50.
So,
but thank you.
I want to ask you, how do you know when you're talking with a client, what's a good way to know if they're going to be a good client or they're not going to be a good client?
Well, when I had my practice, any client that paid me a fee was a good client. It didn't matter what the fee was. They pay me, and they pay me every month. That was a good client. There were people I took as client. I never took people that were, cheated or anything. But there were some people that are not nice. I once saw a client and his son physically fighting and wrestling with each other in their office. And I have a witness. My partner was with me when he saw this. This is a guy I would have never wanted as a client, but it was a very good client, very high fee, very interesting work, and the fact whether I liked them or didn't like them was not relevant. I did a great job for them. They appreciated it. They paid me my fees. It was all fixed fees. I handled one tax audit for them, where the time came out to about 17 grand. And the deal that I had at that time was everything was fixed except tax audits. The time was 17 grand. I had a meeting with my two partners. How am I going to ask them for 17 grand? So I got a meeting with one of the partners, and I tell them what the result was. And then the guy says, "What you?" I said, "I'm going to charge you $35,000. My partner almost fell off the chair. The client says, "Well, how much time did you spend?" I said, "Tell me what part of the result you did not like." He says, "I'll give you a check now."
I love that. So
you're in
I
business.
guess
Yeah.
so. Basically, it sounds like you'll take any client if they pay you the right amount. Is there like a line where you'll fire a client if they do something
Well, let me put it this way.
bad or
Where's the line?
Now I don't take any client. Now I'm very picky of what I want to do. But when I had my practice, we took everything that came our way, and I could talk for hours of the work we did. I took a mutual fund, public company mutual fund client, and didn't know what we were doing, and I got killed on the fee, and that was about 19 years ago, and it's still a client of Withum today, and I've been with actually it's probably 20 years ago. So I didn't exactly get killed on the fee. If a client is litigious, I don't want them at all. I don't care who they are. I don't care how good the fee is. A client that likes to sue people, I wouldn't take. And anybody that is breaking the law, out breaking the law with look, I've had crooks as clients. They have to file taxes. In fact, I wrote an article in you talk about I've been around. In 1980, I wrote an article of the dilemma that accountants have when they want to do a tax return for a crook. Give you an example. You have a drug dealer. Let's say the drug dealer wants to report $250,000 income. Put down $250,000 income, you left out his gross income is wrong. If you put down his gross income was $500,000 and he spent $250,000, his net is $250,000, you can't substantiate the $250,000. You can't substantiate the $250,000 of his expenses. So we have a big problem in taking these people as clients. Usually now we would take, the lawyer would hire us. But I've taken almost everybody. And then when you start dealing with them, I had one guy as a client, very, very good client. My initial work was a lot of money. It was on a time basis. My mind, it was a $25,000 job. The time came out to like 60 grand. I got paid every penny. But then I found out that they're doing things illegally. And I didn't want him as a client anymore. So I had lunch with him. And I said, look, if I was you, I would not hire me because I'm going to make you do everything straight. And you can't switch to that cold turkey. And then I got a call 2 hours later from the bookkeeper that they decided to use somebody else. So I dropped, you might say I dropped.
Continue their illicit activity?
You don't want to get in trouble. And you don't want to put your fortune and your life at risk by dealing with people that are dishonest or out and out breaking the law and that are stupid. So you got to use your judgment and not take them. And if you find out, you can't compromise. Also, if you have staff working for you, the staff pick up on what you do. And if you compromise, you've just told every staff person working for you that it's okay to compromise. And we're in it for the long haul. You're a young guy. You're building a business. And you can't build a business on a shaky foundation. And the shaky foundation is every time you compromise on anything. If you have audit checklists for a personal, not an audit check, a checklist for a personal financial statement, and you tell the staff person, skip it, let's get it out, you just compromised. And you destroyed part of your system for that person. You can't compromise at all. I did a podcast a couple weeks ago. I did a podcast with Ron Shaharan, Profit First.
Saharian?
Saharian.
Yeah.
We did a podcast.
Ron Saharian.
I was describing
Mendlowitz.
someone who worked for me for 10 years. And it turns out that he knew her, and his wife worked for me also for a couple of years. His wife overheard the conversation. And I got to tell you, the staff person worked for me 10 years. So we reconnected. She sent me a letter, and she told me, she thanked me. This is a week ago. This is last week. She thanked me for teaching her about processes and checklists and keeping things in order and doing things right. And Ron sent me an email that his wife mentioned to him that she learned a lot about processes and systems. There's 2 unsolicited things I got last week. And the key to my success is having systems and processes.
It sounds like you got integrity too, which is a hard thing to measure. But if you have it, people know it.
They know it.
They remember it.
Well, they may not know it, but I can tell you what they definitely know when you don't have it. That's what you got to look for. You can't walk around saying, I got integrity, but you can't do anything that lessens people's confidence in you.
It shakes that foundation too. Like
That's what it is.
Yeah, that's why it's hard to measure though, because you can't go around saying I've got integrity, because usually the people that say that have the worst integrity. They're the ones who are lying, just about that too.
Well, Ed, sounds like you have a lot of client stories. Tell us like the craziest client story. Like, what's your go-to crazy client story?
Well, not the the one that you don't tell anybody.
I bet you've got a
the hot
bunch.
scoop here. Yeah, we got the hot scoop.
Well, one guy, I get a guy as a client, and it turns out he had 5 accounting firms in 5 years before me. It's a big company.
Red flag.
So no, I get the client. In fact, the client before me was Tush Ross when they were one of the big 8. Now it's whatever it is now, but so that's a prestige thing. I get a client that Tush Ross was the accountant. So I'm working on everything looks good. About 3 months after I'm the accountant, guy sets up a meeting. He says, I forgot to tell you something. If I have to pay taxes, you're gone. I says, what do you mean? Yeah, I says, if I have to pay taxes, you're fired. I says, you got a big company. You got over 400 people working for you. He says, well, if I have to pay taxes, you're gone. You saw my history with the other firms? You think you're any better than them? Prove it. So that was the meeting. I walked out of here, shook up. I called the guy 3 weeks later. I said, I had a meeting with him. I said, I'm going to tell you how you don't have to pay taxes for the next 2 years. But you got to do every single thing I say. And if you don't do everything I say, you're going to end up paying taxes. I want you to now tell me that it's not going to be my fault, it'll be your fault. He says, what is it? He says, you have to buy a TV station between $5 and $10 million. He says, that's all I got to do? I said, yes. Thank you. 2 or 3 weeks later, he calls me, had a meeting. He says, here's a contract I just signed to buy the CBS affiliate in Erie, Pennsylvania for $6.5 million. If I got to pay taxes, you're toast. and so he did that. Didn't pay. And then I had him build a TV station in Little Rock, Arkansas, and that wiped out his taxes. So for a period of, this lasted 7 or 8 years, we didn't pay any tax. All kosher, legitimate.
So what happens in the year he paid tax? Did he fire you?
No. What happened, we sold the company, and I made a small fortune. See, here's another example of he was on a time basis. I helped him negotiate the sale. My time to help him negotiate was $27,000 and change. This is like 1986, 87, something like that. So I go to him the day after, I said, look, I told you I was charge you on time. The time is $27,200. Here's the bill. I want a $200,000 bonus. He says, well, I had to pay big fees to the investment banker. I had to pay big fees. I said, look, I want $200,000 bonus. The next day, he wired $100,000 to my checking account. So I got 100,000. I went to God.
So,
He got the deal.
so,
he got the deal.
so you only got half?
I got $27,000,
Well, was it-
which was my deal.
plus
The extra money was, I made a deal. I made a
was the
deal
bonus.
to do it on a time. I didn't make a deal to get a bonus. If I made a deal to get a bonus, my integrity is compromised because my job now becomes to make sure the deal closes. How could I be independent and advise them if I'm getting paid if the deal closes? Think about that. A friend
Now,
called.
in your mind,
I spoke to a
was
friend.
100 was.
What?
Were you excited about the 100?
No, I'll tell you what
excited
happened.
too?
No, I was pissed off because what happened, my partner did not tell me that the 100,000 got wired in. And I was pissed off at this guy for months that he didn't give me what I asked for. And then when our fiscal year ended June 30th, this happened like in December. And then in June we had our annual meeting. I had two partners, and we split up the money. And I was ready to tell these guys that I was going to leave. And we looked at we had a $500,000 profit that we split up between the three of us, and including the $500,000 was the 100 that this guy sent me. That's when I found out. I said, why don't you tell me he sent in 100,000? He says, I didn't tell you because I thought you'd want to split it up at that point. I wanted to save it till June. And I ended up leaving that partnership a couple years after that when I had enough money. I said, I had enough money. I don't need this shit anymore.
So,
But we didn't
been a partner.
We didn't fight. We didn't have any fights when I left. I left and we still remained friends, and life goes on.
So, how many different partnerships have you had?
Well, let me tell you, I started by myself, and then I formed a partnership with two other guys, and me and another guy left the third guy. I went in with Jack and Cy. I left Jack and Cy, and Cy asked if he could come with me. So on January 1st, 1974, Cy Siegel and I started a firm, Siegel and Mendlowitz. We didn't know if we were going to make a living. Because we left the other practice. My wife was typing the bills at home, and we made a fortune that year. We made a lot of money, and then we started to build a practice. And I left on June 30th, 1988. We had 50 people. We had a third partner, and we had 50 people in the firm, total people, and we making a lot of money. Making hundreds of thousands of dollars. In fact, the Wall Street Journal wrote an article about us in 1981, how successful we were. And I left. I had enough money. I had enough of this craziness. I had enough of the dealings, what goes on. Plus,
What was the craziness?
Well, I wanted to expand the practice. And they didn't want to expand, you got to make investment. There's a lot of investments you have to make if you want to grow a business. We needed new facilities. We needed an IT person. This is 1988. We needed a marketing person. We needed more structure. And we needed to make a big investment. We needed to be peer reviewed, which nobody was doing at that time. We needed an audit reviewer, which we didn't have. We were doing audit work. So I got to the point that I wasn't fighting with my partners, but we weren't friends. We were friends, we weren't friends. Well, I didn't have that zip, so to speak. And I had enough money, so what I did is I downsized by leaving the practice. And I formed a small firm with Peter Whiteson on July 1st, 1988. And Peter and I merged in with Withum on January 1st, 2005. So I had a good run. I was partners with Cy Siegel from 1970 to 1988, and then partners with Peter Whiteson and Frank Boudelet. Well, Peter from 1988 to today. I speak to Peter almost every day. I'll give you an example. When I merged with Peter, we started the firm with Peter. In fact, Peter's on the phone right now.
Make it up.
No. When Peter and I had lunch together every day when we were both in the office. I never had lunch with my two partners when I was in New York. I would have lunch at minimum of once a week with staff who were in the office. You have staff that you become friends with or like. So I had my group of guys that we would have lunch with whenever we could in the office. Usually I was with clients. 3 or 4 days a week I had lunch with clients. But I never had lunch with my partners. With Peter, and then when Frank became a partner, we always had lunch together. So that's a little different in the tone. And it makes a difference in your work environment, so to speak. So I can't tell you.
What was the biggest argument you ever had with a partner? What was it over?
I don't think I had one argument with Peter, and the whole time we were partners, and I'm not going to tell you about that. And that ended like an hour.
Save it for the book.
No, that doesn't go anywhere. And with Cy and Paul, I don't think I don't think I ever had an argument with them. Or with Jack, we never had an argument. But
I guess not an argument.
Well, sometimes it's not about an argument. Sometimes it's
what was the biggest disagreement?
resentment.
Like, what was the biggest
disagreement was that we weren't structured. When I was with Cy and Paul, look, we had 3 partners. It was a 50-person firm. We're working our asses, working hard. You think about it. By the way, Cy Siegel was a full-time. Cy Siegel became a full-time salesman the day that we started Siegel and Mendlowitz. He was a full-time salesman. He would help out at night with the work. I didn't mind doing the work. I didn't want to go to lunches. I didn't want to go to dinners. We had a very good relationship. But think about this. On January 1st, 1974, one of my partners in a 2-person firm was a full-time salesman. How many people did that before us? I'll tell you something else. In my New York practice, in 1986, we hired a full-time administrator. Today, he'd be a COO. We hired a guy full-time to run our practice. In fact, when I left my practice in 1988, that administrator was making $150K, and our tax manager was making $150K. So I had 2 employees making that much money. So you want to grow, you gotta build infrastructure. You got to do it right. And my 2 partners didn't want to do it. So I didn't see growth in the practice. I figured computers were going to be the future. And I didn't see us in that space. By the way, I bought my first PC in 1982. And then I made my firm we bought PCs for the firm in 1984. I also hired
you got to invest.
In 1993, we hired a full-time salesman who was not a CPA. So I have a lot of things that I was innovative with in the profession, and I wrote about it and I gave speeches about it, that we were ahead of the curve. It took us 5 or 6 years of being at Withum until they hired the first salesperson. I had a salesperson 15 years before Withum hired their first. By the way, my chargeable rate when I merged them with Withum was $50 an hour higher than the comparable chargeable rate that Withum was charging. I found out because when I merged in, the day after I merged in, they said, well, this is my rate. I'll make your rate $5 low. Is that okay? I said, that's your rate? Bullshit. My rate is this. Make your rate $5 higher than that. And that raised all their rates.
So at what point did you know you were ahead of the curves, or that you were did you always, because it seems like you're always trying to keep up with it, right? Did you ever doubt yourself that you felt like you were behind?
I'm behind every day. I'm behind. There's so much out there. There's so many things to learn. There's so many things to do. It's mind-boggling. So I'm always behind. And I'm also insecure that I'm going to lose every client tomorrow. So I got to do the things that, if the client was going to drop me, why would they drop me? And then I got to make sure that
that's like a Jewish thing.
Growth mindset.
Yeah,
that's
you have to you're doing well, but it could all be gone tomorrow.
That's right.
You lose it all tomorrow.
That's right. And what I wanted to do, I figured out at one point, I was thinking of leaving. I left the practice in New York, my first practice with Jack, although Cy came with me. But I started figuring out what clients I could take, what clients I wouldn't take, what the fees were. I do budgets, all this other stuff. And then I realized that if I could hold on to what I got, I'm never going to do bad. I may not do great, but I'm never going to do bad. So I always worked to service the clients. I wanted to wow the clients at every meeting. Every interaction, I wanted to wow them. And I worked hard at that. I worked at it. And I did that. If I got leads, I was never good at developing leads. Cy Siegel was the best of developing leads. I could tell you stories about him that magic. He was, and he remembered every name and everything. So he would get the lead, and then I would do the work, get the client. Then we brought in Paul Rich as a partner. So he handled the workload. So when I left, it was basically Paul and I were handling like 90% of the work, and Cy was handling 10% because he was the salesman. We grew from nothing to 50 people without buying a single client, without merging in a practice, nothing. It was all done organically or with new business. So if you keep what you got, you service the clients. Also, I had a lot of people working for me, a lot. And I found out that if I can keep them, I'm richer than if I don't keep them. And I hired people out of school and trained them because I wanted things done my way. I did a retreat. I did a virtual retreat last summer. I did two retreats, 2 3-day retreats online. And I told them something. Maybe this applies to you, Jason. If you hire somebody at a salary level, whatever salary level you hire them, let's say, and then you train them to do the work, at what point would you give them a raise? Now, I used to give raises every 6 months because the people I was training every 6 months were worth more than they were worth when I hired them. And I never wanted them to leave because of money. Now, a guy that I did the retreat with last summer sent me an email last week that he had somebody that he trained and they learned all their systems and everything, and they left after 8 months because they got a higher salary. Now, I told him, you got to give the salary that the people are worth, not what they were worth when you hired them, but they're worth after you made your investment in them. They now own that value. And I mentioned this woman who worked for me for 10 years. When I merged in with Withum, 2 of the people that merged in with Withum left in 2019. I merged in 2005. So these are people who worked for me for 3 years, and then I merged in and they worked with Withum 14 more years. When I had my New York practice, if we lost people that we hired out of school, it was like an event that people talked about. Nobody quit. I gave raises every 6 months. You work overtime, you get paid for the hour. You work this week overtime, it's in next week's paycheck. I was not a pleasant guy to work for, to be honest with you, but I paid very well. People went home at night feeling that they did a good job and that they learned. And the fact that I was an asshole didn't matter. And my job was to make sure that people followed the processes and followed the procedures. I just gave away for free 153 checklists. Did you get it? Did you get my checklist? You didn't request it on
checklist.
I don't know.
I just gave away 153 checklists.
EdMendlowitz.com. We're gonna get to that.
Go to.
You can't.
I think I have your email. I must have your.
We got a listener giveaway here.
I'll send you the checklist, Scott.
Well,
you have a practice, Scott? I have your email address. Last year I gave away free over 15,000 checklists. By the way, CPA Trendlines is selling them.
We need those. Send those to me. We'll put a link and we'll send it to everyone who listens.
I'll send it to you.
So tell me,
all of our listeners get checklists.
By the way,
you get a checklist and you get a checklist.
I'll tell you something else. I have a practice continuation kit that I've given away over 20,000 copies of for free to my fellow practitioners. I'll send you that too.
So Ed, tell us what the biggest thing that's changed in accounting since you started.
I'll tell you the big thing that hasn't changed, the stupidness of the bosses. Look, I could I could tell you that technology has changed. Yeah, technology has
Are
changed.
the nice bosses stupid?
What? No, all the bosses are stupid.
Well,
I'll tell you why.
Yeah.
Because everybody that complains about the millennials or the Generation X, in fact, I wrote about this a couple of weeks ago. The staff today are no different than the staff when I started. By the way, Withum is making 17 partners on July 1st. 5 of those 17 partners started with Withum. 2 of them started as interns. I know 3 of the 5 very well. They're great people, they're great kids, and they started with the firm. There's opportunities, and what we do is we destroy the opportunities for most of the people, except for, quote, some of the people who stick it out. We have made the hours for the staff longer. We put more time pressure on them, and we don't give them time to grow and to learn, even though it's in all the brochures. One of the big 4 firms has in fact, I saw her speak, CEO, talk about how good they are for women that have babies. They're a great firm to work for women with babies. My partner's daughter worked for them for 8 years. She had a baby, and when she came back to work after she had the baby, her boss said to her, look, we know you had the baby and you don't want to probably work as many hours. You only have to clock 50 hours a week. She quit. She left public accounting. She was heartbroken. And she has a job. She's doing well, but she's not happy. She loved public accounting. The big 4 firm that promotes how great they are for women stinks, and it's a lie, and they don't follow through with what they say.
Isn't that like the honest person?
We have
dishonest person? Yeah.
So we have part-time partners at Withum. We have plenty of part-time women partners. And
Withum's always been
partners, not staff, partners that are part-time. We had a woman partner had a
Withum's
baby
always been
last
progressive.
year. They're really great. They're really a great firm. But so what has changed is the things that haven't changed. What hasn't changed is the attitudes towards staff. Yeah, I'll tell you what happened. When I started, the bosses ruled the roost. It was harder to get jobs. Today, it's hard to get staff. And we have the mentality that the staff have to kiss our ass to get the job. That's not the case anymore. And we got to treat them. Look, I'm talking about 25 years ago, 30 years ago, 40 years ago, I was paying overtime for tax season by the hour. They paid straight time to the professionals. But everybody else was given a fictitious bonus or some hocus pocus stuff. And I gave raises every 6 months for at least 3 years. And we told us that every 6 months you're going to get a raise for 3 years. Then you go on an annual basis. Tell me what's wrong with that. I invest a lot of money training people. I put my heart and soul into it. And then I want them to work for me for less than they can get somewhere else when I could just easily afford it. So that's what's changed. But the consulting, you do, I'm sure, I don't really know how you spend your day, Jason, but I'm sure you do more consulting in your pinky than large firms do in their whole body, and you probably don't charge for that, but it's part of your overall relationship with the client, and you probably have a fixed fee, a subscription fee, and at the end of the year, if you feel you got to make more money, you jump everybody up a certain amount of money, and you're very happy, unless there's a specific project. By the way, in my fixed fee, if there was a special project, I always charge you extra for the special project. I'm not stupid. Sometimes I tell
you just described it. It's great.
Sometimes I would tell beforehand, but lots of times when the job was over, I said, look, it took me longer than I thought. I'm charging X dollars. And if once you bargain a fee, once you told the client that you didn't give them your best price. So I don't bargain, which could frustrate a lot of people.
I agree. That's what when someone tries to negotiate, I say I don't negotiate.
Never negotiate.
But I think your key is you just have to talk with your client and explain to them, hey, we had to do this extra work. This is why it's going to cost more. 99% of the time, they're cool with it. Like you said, they'll wire you $100,000.
Yeah, well, I probably could, if I would have called them up when it came in, I would have thanked them and said, but you could have done a little better, but I didn't know about it. He might have been upset I didn't thank him.
Yeah, he probably was.
You probably had a little grudge. Yeah. I had a little chip on your shoulder.
You know,
for the next 6 months.
if you don't ask, you don't get, but I'm not going to hold something against somebody if they don't. Look, I'm very big on sticking to the deal. I'm helping a guy sell his business. When you help someone sell a business, it's all, I do it on a fixed fee basis. I broke it into phases. And the last phase, I charged him 15 grand for. And the last phase, there was a lot of extra work I had to do because of the buyer. But the extra work I'm going to do is probably going to get the client more than $500,000 extra money. So I sent them an email. Friday that I'm going to have to charge them extra. I said I have to charge you $7,500 extra. These are the reasons. And if you want to discuss it, give me a call. And about an hour later, he sent back an email. Okay. But you got it.
Last question.
Yeah.
Because you got to go. You got to make some money. You're not making any money on this thing. What's your favorite part of accounting that you do, or tax? You've done it all. What's your favorite?
I like every single thing I've done. Everything. I've got every certification by the AICPA. I give them speeches and everything. I was a team captain for peer reviews. I'm admitted. I've tried cases at tax court.
You're the team captain of this podcast. Right
I set up
announcing you.
I set up course systems for clients. I've done everything. I liked every single thing that I do about public accounting. That was my problem. I never developed a niche. I never developed a specialty.
I don't think it was a problem, man.
Because I did everything. By the way, let me give one.
I don't think it was a problem.
Let me tell you one more tip. Write out an engagement letter. And when you write it out, whether you're going to send it to the client or not, if you can't put in writing what you're going to do for the client and why, and justify the fee you're asking for, then you don't have your act together. Write it out, whether you send it to the client or not. Write out an engagement letter for the client. I find that very powerful. It's very helpful personally. So I'll leave you with that parting word.
Okay, give. So most of the people who listen.
Well, here's my takeaways in this: is invest in yourself and invest in your people. So really, just invest in people. Invest in your firm, invest in people, and the payoff will be wealth.
That's right. That's the formula.
Invest in yourself, and you will be wealthy.
Okay, Ed, tell us. So most of the people who listen to this own a firm or thinking about owning a firm. There's only like 4 listeners, so it's not that many. But tell us,
listeners, we got listeners.
Give us if you were starting a firm from scratch, give us some advice on some things. You already talked about process and stuff, but give us a little more Ed advice on some things to close.
Get a client where you can get a check every month. Get that annuity business. The annuity business is your income, is your living, and is your equity. I know people that want to go into like forensic accounting, where they can maybe make some big fees out of it, but there's no equity. And every job you get, you're not going to say, when am I going to get the next one? The CAS work that everybody's talking about is how I started my practice, and I was embarrassed to tell people I did write-ups. That's the key, because you get a check every month. You're never going to starve. No matter what the size of the check is, you're getting a check every month. That's what I advise people
Ed,
to do.
You are the best.
And you said you try to fund your pension, but are you ever going to retire? Like you're
never going to retire. You're going to be like Sid Kess. You're just going to be at the AICPA Engage every year, just hanging out.
Well, I got 2 people that asked me if I'm ever going to retire. My wife and Bill Hagerman, who's the managing partner of Withum. I'm having fun. I'm enjoying what I do. Don't forget, I'm not involved with a lot of I'm not involved with the
prolific
clients.
Writer. Yeah.
So Ed, tell us, so we can go to edmendlowitz.com and buy your books? Is that the best way to go?
The books are at CPA Trend. I don't want to promote the books. If they can't figure out that they should buy my book, then it's not for them. but I'm gonna email you. I'm gonna email you the checklist file and my practice continuation kit, and you can make it available to your list with my compliments.
Okay,
Just that,
we'll
that you
put that in
can't.
the show
Just that you
notes.
can't sell it. My gift to my colleagues.
And you are amazing. We could have you on every day. You've got the best stories. Next time I come to New York, you live in New
This is
Jersey.
a wealth
Live in New Jersey,
of
yeah.
wealth right here. A wealth of information.
Next time I come to New York, we're gonna have lunch together.
What part of Jersey?
In East Brunswick. It's right in the middle by
My mom's from
Rutgers.
Passaic.
Passaic is.
Yeah, my mom-
is,
I
is
have family in New Brunswick, so
Oh yeah, well, New Brunswick is right next to East Brunswick. I have
Clifton.
family in,
That's where
in
she's
New
from,
Brunswick.
Clifton.
I
do.
think you told me.
Got,
you told me once who they were. I forget who they were. You mentioned them.
they were the singers. They had it was my grandmother. My grandmother was born in the Bronx, and her brother lived in New Brunswick. He just died 2 years ago. He had a business that I think they made pocketbooks.
I don't know.
But their daughter is a lawyer.
I don't know anybody.
My
named
grandfather was a CPA in New Rochelle. New Rochelle, New York.
What was his name?
CPA firm was there.
What was his name?
Frank J. Scarano. Frank J. Scarano. He was
Look, I don't
little
know
firm
them,
up there.
but
Okay, you
Raj-
have to report. You have to tell us what number your dad's CPA was. I want to know what that was.
Okay.
Report back.
You gotta email me that because I think it's pretty low. It's got to be very low.
You got. Oh, we spent a lot of time here. I got another story about my father's fees, but I guess we could wait for that.
No. End on that. I want to hear it.
Yeah.
Two summers ago, the summer of 2020, I had to clean out all my stuff of a warehouse. And I went through a box with my father's stuff, and I found his little ledger books, of what his fees were. And his biggest client, he was getting $5 a month, and he started in 1938 getting $5 a month, and in 1943 he raised it a little bit. So from 38 to for 5 years straight, he did not get an increase. Because I was born in 42, I guess he needed some more money, so he raised it a little. When my father died,
That was World War II too.
Yeah.
Probably.
And when my father died,
Couldn't raise rates then.
this guy was my father's largest client. But the point is, you got to raise the fee every year. Your expenses go up every year. And when you raise the fee, you're not increasing the fee. You're passing on your increased costs. If you raise a fee 15 to 20%, that's increase. If you raise it 3 to 7%, that's passing on your increased costs. And you got to do that or you fall behind. Okay, I'll end with that.
Ed,
Lots
it's been
of wisdom.
amazing. That's how I come to New York. We're gonna have lunch. I'll
Okay,
take you
looking
to
forward to it.
Thank
Thank
you.
you,
It's been
Ed.
amazing.
Thanks,
Thank
guys.
you.
Be
Take
well.
care.
Take care.